Joining us with markets is Jim McCormick, agmarket.net. And Jim, talk about tariffs, 25% on Mexico and Canada, 10% additional on China on the first day of the Trump administration. So let's talk about this. Short term, do you anticipate we're going to see a lot of front loading, a lot of export buying?
That is the assumption right now, Michelle, is you're going to get some front buying. Essentially, remember, the tariff right now is essentially bringing stuff in. So people are like, well, what will this matter? Because now it's going to be a race to try to get the grain or product bought before your country maybe retaliates with like-minded tariffs. The Mexican president already suggested she was going to retaliate right from the get-go. So there's going to be a window here. If you are a buyer of U.S. ag goods or buyer of any goods from the United States, you're going to try to get as much of your goods on hand before your country maybe retaliates.
Long term, how detrimental could this be to agriculture? Are we looking at a trade war?
Unfortunately, Michelle, I think we are going to be looking at a trade war. We know what happened last time. It took months, if not years, to essentially get played out. And the reality is we really got nowhere. I mean, you had some of these deals that were made, but China never lived up to the deals that they made. So I think, unfortunately, we're going to get into the trade war. President-elect Trump has told us the whole election cycle, I am going to put these tariffs on. I'm going to tariff not just China. I'm going to tariff every exporter in the United States. Today it was Mexico and Canada. Tomorrow it could be Europe. We just don't know. But I think, unfortunately, when we do get into these tariff battles, agriculture in the United States tends to take on the chin, because it's one thing we do in the United States very, very well. We produce. We are the low-cost producer. We are the volume producer for a lot of products, grains as well as meats. So when countries want to retaliate, they tend to retaliate with the importation of U.S. goods. And with Brazil building out their ability to export grains and other proteins, the rest of the world buyers do have a secondary option if their government do tend to retaliate against our tariffs. So something we need to be mindful of.
What do the tariffs mean for the broader economy and especially inflation? And how could that impact the stock market and money flow back into ag?
Well, in general, the tariffs you got to view the tariffs as inflationary. I mean, I know the rhetoric is the exporting country pays the tariff. That's not how it works, folks. It's the importing buyer that pays the tariff to bring the product into the United States. And when they pay that tariff, be it 25%, if they're going to more than likely pass that tariff on to the consumer. The Walmart CEO already came out and said, look for prices to go higher if we get into a tariff war. So that is inflationary. That is going to mean the cost of goods is going to go up. It's going to mean the cost of food is going to go up for food, that we bring into the United States. And that could have a negative impact on the economy, because in general, the economy is assuming the Fed's going to cut interest rates with the idea that inflation is under control. If these tariffs do start to show up on the inflationary readings and inflation starts to heat up again, at best, it may cause the Fed to pause on the rate cuts. At worst, it could actually cause them to reverse course and actually raise rates a little bit. Something we need to be cautious of and just keep an eye on.
Thanks so much, Jim McCormick with agmarket.net. That is Markets Now. And we'll have more Ag Day coming up.